Morning, everyone. Today is February 14th, Valentine's Day. Happy Valentine's Day to everyone. Hope you guys get some time off tonight and this weekend to spend some time with your loved ones. Like I said, I spent quite a bit of time with my father this week dealing with rain and doctors, but take care of him as he's always taken care of me. And such a wonderful human being my father is. Anyway, long and short of it, we are looking at a big recovery phase here. I created this other chart yesterday. This is the the S&P 500 futures. You can very clearly see we're flagging. You can very clearly see we rolled into the apex area where we're going to start getting some really extreme volatility. You can go through a basic count to basically look at this as an A, B, C, D, E type of move. But, I look at this and I see this failure right here. Let me redraw that. Right here, I see this failure in this rotation as counterproductive. I would have expected the move to take place 3, 4, 5 days ago to the upside. Now, we could still break out. Understand that we have, these highs that we still have to watch. And I'm going off the high close, but we could just as easily move up here. So we're not at new highs and we are rejecting a little bit this morning. We'll see how it plays out. But obviously, my deep V pattern didn't really set up, unless you want to count this Monday, it's not very deep. So obviously that didn't set up very well. And that was let's call it a failure. I was wrong. It didn't set up. Now we are still consolidating. We are still flagging. I personally still believe there's a very good chance of a rollover here. You can see the excess phase peak pattern setting up. And I'm using this chart as an example because my other chart's kind of cluttery. But you can see the excess phase peak pattern setting up here. We've got the clear rotation. We weaken. I mean, in theory, I can come in and draw it as a move like this, but that's would indicate that we've already broken, and then possibly moving into a secondary little excess phase peak pattern here that may end up resulting in a secondary breakdown. So, we can count this as one or two broad excess phase peak patterns where this one is already broken, this one is trying to get broken. That would indicate that we would have, two major support and resistance levels down here and down here. And these would be our critical breakdowns. So we would be looking for potentially, if these hold up, we would be looking for potential breakdown into these areas or below, which I think is probably about a 75% chance right now, or we get above this level here and really start rallying, which would invalidate both of those. So that's the 61, 62 level. And again, the same kind of setup applies here. You can see, in fact, I'll remove everything and redraw. So we have the high. We haven't touched the high yet. Very important to understand that failure to make a new high indicates that we are potentially changing direction. So, this was a new high back here that rejected back to the downside. That's what set up our rotational model, our excess phase peak patterns. We come in here, we do the same thing. We have kind of, you could say, a broad excess phase peak pattern here. Okay, we can argue that, indicating that this is our low. Okay, I see that. You should be able to see that too. Secondarily, I can see that we have, through this flagging formation, kind of a immediate rally up here, leading to a second excess phase peak move here. And given where we're at, that would then indicate that this 590 level becomes our critical support for this current break excess phase peak pattern. So given where we're at, given the chance that we may get a little push up into this new high, which would be bullish, I would be looking for a rejection. Again, I would be looking for a rejection up in this high, coming maybe up into this area, rejecting and coming back down, trying to break through here, consolidating and breaking downward. So this is the setup that we have. This is the market, very similar to to Bitcoin, trading and consolidating within this range. Now, Bitcoin's range set up way back over here in October, November, but I would argue that, we're looking at a range in this manner that could continue to stay within this 568, 570 area to 610, 612 area, consolidating and potentially moving further out into what I had argued before would be the broader expansion channel, possibly something like this, a widening megaphone type channel carrying out into June, July. So we are still very early. We have these excess phase peak patterns. They could invalidate to the upside by just simply closing and building momentum above the let's call it the 61150 area. We would need to get above that area and continue with very strong momentum, or we could reject back here to the downside. Now, like I said, these flagging patterns here are bullish. So one of the faults that I made, and I apologize if I got anybody trapped on the wrong side, these upward flagging trends you see here and here, they're pretty much dominant upward trending until it breaks, if it breaks. So while I've been calling for a breakdown that I think is imminent, I think it's going to happen. And I think we're going to get down into this 590, possibly lower area. I mean, it makes sense that if we're going to break down, that it's going to try to get below this level. It has to almost. And then, of course, we're at that point right now. So the next 5, 6, 7 days, whatever happens, going to be very telling as to whether we get a breakdown or whether we get a continued rally. Now, the U.S. markets are still, performing fairly well, but like I said, I just don't at this point see too much clarity in future market trends. That's why I'm kind of, I want to say biased, but that's the wrong term. I am expecting more consolidation. I really am. But we'll see how it plays out. At this point, a new high here will get us into bullish trending. A breakdown will move us into this consolidation, megaphone flagging. And like I said, I think the breakdown megaphone flagging is, probably the highest probability direction right now, because of the uncertainty in the markets. Now, the dollar complicates things. The move in gold complicates things because, a super strong dollar will lead to, more assets moving into the U.S. markets. So that gives us a little dominance to the upside, potential upside. But I really see kind of a shakeout coming up. So be cautious, obviously long is the general direction, but we're up here near these highs and we're moving into the crush pattern. So we have a big crush pattern today, which generally moves downward. Crush patterns, if I can show you what a crush pattern would look like, it would kind of look like this. So this is what a crush pattern kind of looks like right here, or maybe right here, or maybe right here. A crush pattern typically is a counter trend rolling of price that just like crushes the previous range. That's why I labeled it the crush pattern. So this would be a crush pattern as well here. This would be a crush pattern here. I'll try to draw a little circle around it. Oh, there you go. Whoops. That's really like a crush pattern. This is like a crush pattern. This is like a crush pattern. This as well is kind of a crush pattern, that black bar. Generally, a crush pattern, like right here, just is a big breakdown bar, is what it is. And that's where we're at today. So if we get the big breakdown bar, we could be looking at something along the lines of, opening in this area and moving down quite extensively as a big black bar, maybe down to 596, 597. Could happen. But generally, a pretty big breakdown bar is a crush pattern. So that would set up another breakaway. That would set up our, not a breakaway, but a breakdown. That would set up a move to the downside, and that would correlate with my expectations. Now, if the crush pattern were to be inverted, which again, at this point, the crush pattern is in trending mode, so it's probably not going to be inverted. Like I mentioned to you, any breakout above this, let's measure it here, 511, call it 611.50. Any breakout above that 611.50 area, and we're going to be off to the races. So understand that if we get a good, solid momentum rally up here, be prepared. We could be off to the races to the upside. We got to get above that 611.50 area. Got to see it move up there with some real solid confirmation, meaning momentum, not rejecting, not getting like this and rejecting back down. That's not what we want. We want to see one or two or three bars of real confirmation. And that would then invalidate these excess phase peak patterns, and we'd be looking at another little move. Could go up to 620, could go up to 624, and then roll back downward. But as long as we stay below this level, 611, let's call it 610.90, roughly 95, 96, we are looking at a higher potential rollover than breakaway right now. And the reason being is because we've seen these breakdowns. We've also got that, again, that flagging back here on the ES that plays into this same volatile rotation. So we're at the apex. I'll draw my little apex rectangle. You can understand how important that pricing is, basically right here. That price range is very important. It's going to act as major resistance or major support. You can see it carries all the way back to here, acting as major resistance, major support. So we're above it. If we roll down below this level here, we're going to be below resistance and support, and we could break down. So you really want to kind of watch the 6065 roughly on the ES. If we get below 6065, then we're probably in a pretty solid breakdown. Okay, let's go back to the QQQ. Same type of setup. We've got these multiple excess phase peak patterns setting up. I've highlighted them here. We've got the highs up here. I'll try to draw a better line. Remember, we're getting the crush pattern again. So the crush pattern will likely represent a fairly strong breakdown. You can see we've just gotten above this high. If we do get the breakdown, we are going to be looking at a breakdown move that could be, similar to this. We would likely want to see the markets come back down into this area here, 510.43. We would be looking at a crush bar here being kind of a rejection bar, possibly setting up like this, moving strongly to the downside, maybe even deeper, maybe even down into like this area. I mean, that would be a very big crush bar, but it could happen. So again, crush bars can be very large. This is kind of a crush bar here. So you can see right here is kind of a crush bar. This is definitely what I would call a crush bar. You can see them over and over again. Here's a good solid crush bar, it looks like. This would be kind of a crush bar as well. Crush bars basically are rejection. They're just clean rejection, moving away from the previous trend. This is a big crush bar. I would say we could get something fairly substantial today to the downside. Okay, so let's come over here and like I said, I would be, possibly expecting the 600, 602 area on a big crush bar today. We'll see what happens. But it looks like we may get a fairly big breakdown. Let's go to gold and silver. Gold and silver have rolled. Silver, boy, look at silver. Big move in silver up to almost up to 34 bucks finally. Okay, well, this is a big move. Silver's finally kind of caught its edge, maybe. Let's come over here and look at daily, see where we're at. Oh, yeah. Big move back to the upside. Love that. Love that silver's finally making that move, boy. Took it long enough, didn't it? Okay, let's go back here to hourly and let's take a look at the gold and silver pattern, which is a gap stall revert flush. Okay, now this is something that I added end of last year. There were a couple of missing patterns, and I tried to add some into the SPY cycle patterns by studying them and gold. Now, a gap stall revert flush is essentially can be any of these. Now, it's not a clearly like a crush pattern or a rally pattern where it has any clear dominance. And these harder patterns to label mean there's lesser and lesser of them in the database. So what we end up here is we could end up with a big gap or a stall, a reversion, or a flush pattern, which is kind of like a crush pattern. And what that would mean is that we could be looking at, and I'll just try to draw it for you. We could be looking at a gap move, which or a reversion move. So when you take a look at a reversion, if we come in here and we take a look at these moves, basically look at this is hourly. So again, this is the last 5, 6, 7, 8 days. Take a look at where you would see, and you could use a moving average, but you could use where you would see an average price range. Here, same thing. Take a look at this and look at where you would see an average price range, maybe something like that. So reversion would indicate potentially a downward move here or a downward move here. That's what this is telling us. Gap, stall, reversion, flush. It's basically telling us that it's kind of a reversing back to the downside. Back, in this case, downside because we're up. But it would be a revert to the mean type of a pattern. So I would suggest that if the markets do come down, as I suspect, the S&P, then gold and silver may try to revert back down into this area as well. So you're looking at maybe 29.40 for gold, maybe 29.30, 35. You're looking at maybe 33.25, 33.40 for silver. That's what the gap stall revert pattern actually plays into. Next week, we're looking at a blank top, gap potential, gap, and then a blank. So again, we're getting more volatility next week after a topping pattern. And again, next week here, we have a top, gap potential, or reversal, rotation, and another top resistance area. So you can see here, we're running into some more volatility in the SPY, which plays very cleanly into that apexing pattern that we had talked about here. Remember, we have this flagging setting up in the SPY. I'm sure I've shown it to you, but I'll do it again. You have this flagging coming across this area in the SPY, and we're reaching, I mean, we could probably readjust that. This is really a very island low type of scenario. But we're at that point now where A, B down here to the low, coming down even deeper. C, D, E, like I said, I would have expected to break out here, but it failed. It rolled back down, and now we need to see how it breaks out here. I'm kind of looking at this as an A, B, C, D, E that should have broken out here, that turned into a secondary A, B, C, possible D. Well, let me do that again. So ran up here, A, B, C, D, E, potentially. So it could just completely reverse here, guys. This is kind of a what I would call a washout high, volatile high that could just completely revert back to the downside. So again, pay attention to what's happening and let's see how things play out. Now, we'll go back over here to Bitcoin last. Bitcoin is up 38 bucks, really weakening into this trend. This is daily. You can see all my drawings, obviously. I still believe that we're moving into this downward kind of a congestion phase because the markets are struggling to find real direction. I mean, the economy will continue to perform, but if Trump is eliminating potential government spending and let's call that inadvertent stimulus, we're moving into kind of a correctionary phase here that may be stalling the markets. So the fact that Bitcoin is moving downward while the S&P is moving higher, and the QQQ um, moving higher, kind of disconnects with what was going on originally. Bitcoin used to be a pretty good alignment correlation to the Qs, and it's not happening. In fact, the whole mechanism here would be that if we saw a breakdown in Bitcoin, staying below 100,000, getting below this 92,000 level, and I think we would also see a breakdown at the same time in the SPY and the QQQ, and I think we'd probably also see a breakdown in metals, as that would indicate that the markets in general are undervalued or are devaluing. Now, based on my proprietary analysis, let me see if I've got it here. Nope. Okay, I'll come here. Come here. Based on my proprietary analysis, sorry, just trying to find these things as we go. We're looking at a moderate. I'm going to show you some extra things here. We're looking at kind of a moderate devaluation phase. So this is what I call my base trend index. This is measuring dollar activity. Dollar at this point was weakening. Dollar demand was weakening last week as we have this rollover. I had talked about the smart money index in a videos over the last couple of weeks. This is my smart money index. This particular rollover top right here, so we go into the edit mode, chunka, try to get this to move. We go into the edit mode here. You can see that we had moved into a topping phase right here, which was a rollover top right through here. This was a upward trend that finally just shifted into a top right here. We've got the same upward trend that finally shifted into a top right here. This is weekly. Here's our rolling topping pattern. This has been really driving a lot of my research. We're now 3-4 weeks into this top. So now, granted, I could be a month or two early in this, but this is a very clear top. I can't tell you how clean this is. When we get into topping phases, we move through this upper area here and we get into these really high breakdowns. When we shift back into bullish trending, we move into these lower areas and we see no top. You see up here, nothing. That's our bullish phase. When we get into topping phases, we start to get this type of activity up into these tops. So because we'd stayed in this bullish trending activity for almost a whole year, 2024, and now we've come up into this topping pattern, I'm telling you, this is a top setup. Until this changes, this is a top setup. And I'm just going to tell you that I think we're going to be breaking downward, and that's the way it's going to go. Okay. Now, the devaluation or commodity deflation index is rather flat. Really lost a lot of momentum over the last 4, 5, 6. This is weekly, 4, 5, 6 months, basically. Back here, September, you see, we just lost all of our momentum. We had moderate momentum, and now we're down 30, 40%. What is this? That's the base index. Okay. The market ratio index completely stalling out. This is monthly. And again, you can see we went through the election, had a big rally, November, December, January, February. We are really just lack of momentum in the markets. That's what I'm going to tell you right now. Lack of momentum. We have the come over here. The devaluation cycle phase index weakening dramatically. I mean, this is the near the lowest levels we've been on this lower regression channel. So again, very, very weak. The innovation index had rolled over. Now we got a big pop in innovation yesterday. I think innovation still will perform fairly well, but pay attention. We're just not getting a big rally phase here. The accumulation phase index has moved into bearish trending. Green bars are bearish trending. Red bars are bullish trending. So you can again see here very much in alignment with my topping pattern, right? So we came back over here. We had that top set up right over here on the smart money index. That was our rolling top pattern right over here. We rolled through that entire mode. We had a little topping pattern. I think it was back here. Yeah, a little pullback. Oops. Right over here. And then went back to bullish right over here. You can see we had a little pullback here, rolled back into bullish here. Now we're into bearish. And that's the bearish trending setting up right up here, the top, which would indicate, again, pullback. Think pullback, moderate pausing pullback for 3, 4, 5, 6 months, maybe. That's what the data is showing me. So again, I try to be very data oriented because that's, I guess, how I am. So we have the U.S. leading index is moving into a downtrend, probably a little higher right now. We have the fear index elevated at 7.77. Sentiment index is consolidating, very indicative of a rolling topping pattern. Remember, we had that same type of setup right here. Here's the rolling top. Come in here. There's the rolling peak, rolling across this peaking area here, rolling into bearish trending until we get out of the trend mode right here. Then we go into bullish trending here. This is what the smart money index shows us. You can see we move into real growth right into this area. And basically what this has been telling us here is the last 5, 6, 7 weeks here is a top. Going to be breaking downward potentially. And not trying to waste your time here, guys, just trying to give you some real info. And again, this is the type of research I do for my subscribers. And it's very, I mean, I think it's critical to have this type of information. Lastly, I guess I'll show you this, which is the US to global market index. And you see this breakdown in the global market index here, this orange line or red line here. Let me come in and edit it so I can draw on it. So you see this breakdown coming down like this. The global market tends to lead the US market. So you can see here, breakdown, and look, this is where we finally kind of broke here. It leads the market by, in some cases, 4, 5, 6, 7 months. Now, normally bottoms kind of align fairly clearly, right? They align very clearly right here. But topping, generally, you'll see the global markets break down. And then 4, 5, 6, 7 months later, you'll see the US market break down. COVID was almost instant. Still, the foreign market broke down before the US market broke down. And again, same type of scenario here. These were almost instant. But this downward trending right here, pay attention. That downward trending is indicating until we move into solid upward trending that we're looking at a potential breakdown in the US markets. Okay. Looking at very solid consolidation breakdown in the US market. So I've got a lot of external indicators that are telling me that we're moving downward. The first and foremost, that is, in my opinion, the most important is this one. The smart money index rolling into that top, just like it did right here, indicates that we're in a very early stage topping pattern right now, which is why I firmly believe we are going to roll down into a widening kind of an apex pattern, rolling across here, possibly getting down to these lows here over the next 5, 6, 7 months. Okay. Oops. It's literally screaming at me. Hello, top setup. It's just screaming that this is a top setup right here. And that means that we're looking at some broad consolidation until we get out of this topping formation. Now, what would cause us to get out of this topping formation? I mean, ideally, guys, we would have to be able to establish new highs and avoid this upper area while doing so. So just like we did here, establish new highs while we stay away from that upper area up here. That would indicate we're going back into a bullish trend. And it could take many weeks. But right now, this is a top. That's why I'm telling you, I think we're going to be broadly moving sideways. And again, I'm going over it, over it. But look at the data. A lot of what I do is factually driven based on the data. This is not so much guesswork. This is basically look at the data, tell me what's happening, and then go make decisions as to what's happening on the daily or hourly or 20-minute chart. Okay, guys, you got a little extra this Friday. Happy Valentine's. We're gonna get done with the pattern, the video this morning. 31 minutes. Okay, go get some today. Happy Valentine's Day.